Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. The more I think about the use of LFP ion-based batteries with Tesla, then the more advantages I potentially see. Because Tesla can use LFP ion-based batteries, they are the winners. This is such a big deal. It was really hard to achieve, but through their efficiencies, Tesla have done and still offered a satisfactory range with these low-cost, durable, safe batteries. And I feel like I'm starting to really get my head around this more. Tesla noticed that it's a lot easier to obtain supply of iron batteries than nickel batteries. The battery production is constrained by the rate at which they can mine more nickel and cobalt to increase supply, whereas the iron required for LFP batteries is far more abundant. LFP batteries are not constrained by any of that. The growth of Tesla is constrained by batteries. Yes, we have component shortages, but that will likely only be short-term, especially when Elon recently told us at the Italian Tech Week that chip shortages will likely be sorted next year. But in the long run, it's going to be batteries. Whichever company has the most batteries can win the EV game, provided they are selling the EVs at a profit. But what if nickel batteries and nickel mines take too long to grow and build up until there is enough supply to meet the demand for all these batteries? On top of that, at the same time, this demand is also increasing dramatically as more competitors enter the EV game and other EV companies ramp up their battery production. Demand will be increasing exponentially, so will the supply of nickel from these mines be able to keep up? But for iron, well, there's plenty of iron mines around the world. There is an abundant supply of iron. On top of that, Tesla already seems to be securing what nickel resources there are, likely on a grand scale, because they can handle that much supply, unlike the competition. And Tesla is so much further ahead of everyone else. Tesla has solved so many issues and problems that the competition aren't even close to discovering yet. Therefore, with this lead, Tesla is able to secure all the supply chains at an early stage. Before any of the competition are also chasing the same resources, Tesla has already taken all the low-hanging fruit. Let's say it's going to take years to increase the current level of nickel, expanding mines and exploration for more mines. Meanwhile, there is still plenty of iron. And as nickel is in more demand, well, admittedly, commodities are a hard game to predict, but we would assume that the price of nickel is likely to rise, and thus increase the price of nickel-based batteries, whilst the price of iron likely stays fairly constant. This is going to create a further disadvantage for anyone using nickel-based batteries, namely legacy autos. Less supply available and at a higher price makes it very difficult to ramp up. The Chinese EVs are only able to achieve an acceptable range of LFP by using so many batteries in a car, and they still only reach around 260 miles of range. But the legacy autos need to have cars capable of 300 miles. They have to offer sufficient range, as they're at a higher price point than Tesla. Also, the fact that Chinese EVs accomplish this by using so many extra batteries, well, even though they're cheaper than nickel-based batteries, they're still not free. It still costs a lot more money having to use 50% more batteries to get the same range as Tesla. And it also means the car is much heavier, handles worse, doesn't perform as well, and doesn't brake as fast. Therefore, it's not that the EV producers are battery constrained so much as they are resource constrained from mines. Perhaps that should be the correct term. Some EVs are mine constrained. There are not enough mines out there making enough nickel and cobalt for their batteries, but there's plenty of iron. I mean, we've seen the level CATL are planning on ramping up. It is an incredible level. We don't see any nickel-based manufacturers with targets as such, save Tesla of course. Not only that, all the nickel has to be shared with all the other legacy autos who are also trying to ramp up at the same time. So the minerals are likely becoming more scarce. Part of me thinks this is perhaps Tesla's game theory. Make a big noise about nickel and how important it is, then all the legacy autos jump in on that ship and search for nickel. Meanwhile, it quickly becomes apparent that there isn't enough nickel to feasibly produce EVs for the majority of EV companies. And due to nickel potentially becoming more expensive, then it may end up just being an element more suitable for electric aviation, where it can add more value. And then all the nickel-based battery EVs would have to start all over again, with LFP batteries, or some other abundant alternative, and then all their cars would handle terrible and have hardly any range or performance. As an EV manufacturer, I would not want to depend on nickel. But there's no way legacy autos would have enough lives to survive that mistake. It's going to make it very difficult for them all to try and secure their supplies at the same time. Ford and GM have already partnered with LG and SK Innovation to make their nickel batteries for them. They're even building plants for them. They're locked in with nickel batteries. Similar for Volkswagen. It's a good point really. Legacy have to realise this is not at all their industry. Their brands simply may pass over into the industry, but very little other than that. But if they make massive investments, like billions of dollars, into capital equipment that make products that may very well become obsolete, it's just an example of how fragile these companies are. They cannot make one pivotal mistake like that, or they're gone. Except this is still the beginning, and it's going to cost a fortune, and there's going to be so much investment they need to do, but none of that investment can go wrong either. Like investing in factories that will end up making obsolete batteries, or batteries that use materials that are simply not cheap or abundant enough. Yet there are going to be a lot of major decisions like that will crop up for legacy autos. Legacy autos are forcing growth. They're not growing naturally. They're building products that they sell at a loss and advertising them extensively. This is not how Tesla was grown. The same is true for the other startups like Rivian and Lucid. They have significant capital. They can afford to make a few mistakes, unlike Tesla back in the day, that was often close to bankruptcy. These startups are being built from the ground up at least, with a big piggy bank. Legacy autos are trying to run before they can walk, which makes it much easier to trip over. Legacy autos have not naturally grown into the EV industry. They have forced their way into it. The market has decided that about a minimum of 250 miles of range is required for an EV, so you have to deliver sufficient range by any means necessary. If it means your batteries end up costing twice as much, then you need to be able to pass that cost on to the customer. If you can't, then you don't make a profit. Oh right, none of these EV companies are making a profit yet, except for Tesla. At the end of the day, Tesla is not going to be constrained by nickel mines. Tesla is not going to have to worry about finding enough batteries for their cars. Tesla will make cars around what batteries are available. The legacy autos are making cars that they hope people will buy, and batteries are an afterthought. Whereas Tesla work out what elements are available for mass-scale EV production and then make cars around the available ingredients. Therefore, Tesla are able to keep their prices down and their growth high. Iron battery production is increasing faster than Tesla is building factories. Do you see? The cliche of battery constrained will not exist for Tesla, and the fact that the component shortage should soon sort itself out is major too, as Tesla have a significant amount of ramping up to do next year to get those new factories at capacity. So despite we're being told that legacy autos or Chinese companies are catching up to Tesla, well, that was old Tesla. Tesla are about to become a significantly larger automaker though. Possibly this year Tesla will have a capacity of 4 million vehicles a year. This is a huge jump from just 500,000 last year, and it won't take much more until they're up around 6 or 7 million, putting them close to the same number of deliveries as Toyota. Yet, unlike Toyota, Tesla will still have significant growth remaining. And just imagine how much profit Tesla will be taking in with that many sales, and how that will be invested in growing the company further. No other automaker is dealing with levels of capital and cash flow that Tesla will soon have. Not even close. I think it's going to be very hard for Volkswagen to continue their EV growth. Yes, Volkswagen did grow 165% year over year the first half of this year, from the first half of 2020. But it's a lot easier to grow when you make fewer cars. It will be interesting to see how Volkswagen grow next year. Most of this year's growth is attributed to the new ID3 and ID4. Well, what new EVs are Volkswagen launching next year to further increase their growth? There is the ID Buzz that has been mentioned, the hideous camper van that ended up looking nothing like the prototype. There are talks of an ID8 too, a larger electric SUV, presumably to compete with a Model X, except likely more expensive with less range. Not the way to enter the market, especially with an inferior brand. And then the ID Life, Volkswagen's compact EV expected for 2025. So yeah, really, where will Volkswagen's growth come from next year? I think they may struggle to even achieve 50% growth in 2022 from 2021. Meanwhile, have I mentioned that Tesla are about to increase their capacity by 300%? Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.